We have with us first up to spearhead the session. Once again, we have with us Mr. Harshil Mathur, who's the CEO and co-founder Razorpay. And joining him, we're truly delighted to have with us none other than Shri P. Vasudevan, Chief General Manager, Department of Payment and Settlement Systems, Reserve Bank of India, and Mr. Nigam, CEO, Phonepe. So ladies and gentlemen, let's have a huge round of applause. Pioneering leaders joining in to share with us about digital payments for public goods. So let's take forward another interesting trialogue. I'm going to quickly request Mr. Harshil Mathur to take it forward from here. Over to you, sir.
Hello, hi. Good morning, everyone. Glad to be back on a session. Today, our topic is something our finance minister recently spoke about, which is digital payments for public good. And to discuss on this, we have two amazing gentlemen, Mr. Vasudevan, who's Chief General Manager with DPSS at Reserve Bank of India, and Nigam, who's the CEO of Phonepe. So jumping right into it, let me first start by talking about the impact of digital payments. So I'll start with you, sir. The regulator has facilitated a lot of strides that have happened in digital payments in the last couple of years. What, according to you, is the biggest social political achievement or social economic achievement that wouldn't have been possible in India if digital payments hadn't scaled the way they have in the last couple of years?
Hello. Good afternoon, everyone. It's a wonderful feeling to be here and to see so much of interest and attention for a simple thing like payments. And I am very happy to also be part of this session. And the title is Digital Payments for Public Good. It's a full stop. There is no exclamation or a question mark. So that everybody accepts that digital payments for public good is the way forward. I want to just mention a couple of things. When we normally look at the basic needs of life, we are looking at roti, kapda, and makan, the food, clothing, and shelter. And all these things are, in the present day context, linked by payments. If I have to do some shopping for food or for clothes or whatever purpose, typically it's all about payments, and payments are becoming the be-all and end-all for every requirement. And I just want to highlight one particular aspect that during the lockdown, when people had difficulty in mobility and people had other expectations, the payments got the tag essential services. That is the biggest, I feel, the benefit that can be seen for everyone who is expecting something from payments. And honestly, I have to give kudos to you all for delivering on the expectations as well. When they said payments are essential services, it has actually delivered during the lockdown, that people were able to meet all their requirements and much more using this digital payments mode. So I feel that has been the biggest expectation from payments, that it can deliver. And over a period of time, many other deliverables have also been added. For example, like if you have to have inclusion, it has to be through payments. Just like we have in Mumbai, the gateway of India, the payments are also turning out to be the gateway to financial services. So the other developments on the financial services side are all picking up because everybody is getting comfort from the payment side. And it's our duty and our it's also a big responsibility that we deliver on this expectation. And maybe as we discuss, we will see what more expectations are going to come, not just from within the country. The earlier session was also talking a little bit earlier, maybe a session before that was also mentioning about what more can we do for other currencies in the country as well. I am saying there are no end to the expectations. So that makes the entire process so much of like we have to deliver, and we have to deliver it the best way we have done so far. And I have no doubt that we can do it. We will be definitely delivering and discharging all our responsibilities. And as always, I am sandwiched between two experts and between two industry players. Let us see how these discussions go forward. We can have more perspectives coming in as well. Thank you.
Yeah, Sami, over to you. Right? Like, what role have fintechs and innovators like yours have played in driving some of the socio-economic objectives that Vasudevan sir talked about? And what more can we do to drive this, like as the topic says, digital payments for public good?
I think, good afternoon, everyone. I think as Sir just said, I think the watershed moment was when COVID hit and a lot of essential services were locked down the first 40-odd days. People for the first time didn't want to touch anything, including currency. Um, Particularly mobile-based payments, not even card swiping, but mobile-based payments, just suddenly became such an expectation and need. And I think as a member of the industry, I'm actually really, really proud of the overall ecosystem. I think we met and possibly exceeded the demands in terms of just really rapidly increasing both retail merchant acceptance points as well as consumer payment demands. So I think it is fair to say that digital payments now is reaching a tipping point. I wouldn't say we are there yet. Like if I see telecom penetration or smartphone penetration, it's still about 40, 50 crore people more. But I think it's reaching a point where it's irreversible that digital payments will become a way of life in the next 5 to 7 years for the population at large. It's probably in a 3 to 4 year lag to smartphones, if I see the penetration, and maybe about 5 to 6 years lag to internet penetration, 2G, 3G, that era. So what's really exciting for me in the future, if I look at the socio-economic impact, we used to have this jam triangle that we used to always talk about, right? So now everyone's banked. Everyone's now close to having internet-enabled smartphones. Everyone's got a digital identity or a biometric identity. Payments is actually at the fulcrum. If we redo that diagram, if we can get everyone onto digital payments, we often talk about data being oil and all these various things, but payments data can enable flow-based lending in a market that desperately needs it. Payments data can open up commerce and just 50,000 different use cases. So I think the role is to definitely make sure we do whatever we can to make it very, very low cost. I'm still not in the camp of public good equal to free. I think it's good for public. That much I'm certain of. I'm still not in the camp of everything can be free for everyone. Someone will pay the piper, whether it's a toll model or it's some other model, it'll play out. But I think we're on the right track. We have the cheapest merchant acceptance in terms of QR codes. We have the cheapest smartphone-enabled play. You don't need to issue any physical cards. You don't need to set up more ATMs. India's digital payment journey is truly mobility first.
I'll come to the charges question a little later. I know that's an interesting debate, but before I jump into that, let me talk about collaboration. Right, one of the shining examples of collaboration in recent times has been the India Stack initiative. Right, so we started with something that was built as a public good, like UPI, spearheaded by NPCI, and the last mile delivery being solved by private players and fintechs, taking it to the masses. Right? And I think that collaboration is what led to eventually a big, huge success of UPI with private players driving and spending a lot of money and getting it out to the last consumer, while the central stack remains in some sort of way a public good. How do you see that shaping up? Like, do you expect a lot? Are there any other new sectors that you see where this public-private collaboration could really drive outcomes, both from a regulatory perspective, but from industry perspective as well?
This is definitely a trilogue, but there cannot be two thoughts on this. It has to be a PPP only, private-public partnership, because the reach is so huge and the number of people to whom we have to reach out is also so different, so massive. So we need to have the engagements. And the way in which the private sectors have been participating, we have to give credit to them. See, the public infrastructures are also there, be it the Aadhaar database, be it the CKYC registry, be it the institutions also, like maybe CCIL in the financial sector space or NPCI in the payment space. They're all there as public institutions, public infrastructures. But we need to have these APIs and other access points to these infrastructures that come in, and they can actually make the people come onto these payments front and the financial services front in an inclusive way. And we definitely need the private sector for that. Samir was just mentioning a little bit about onboarding of merchants. The way we actually receive money in a, you say UPI transaction, since you took UPI, the way we receive money, we also become a merchant. And the way the merchant base has been increasing, I was just seeing a number recently that there are, say, 20.15 crore UPI QR codes in the market. That means everybody is a merchant. Just imagine, we never thought there are so many merchants in the eco space. And suddenly everybody is becoming a merchant. And my general expectation is maybe on the charges, some discussions will come later. But my basic expectation is, like, when we receive money, we expect the money to come to us quite fast. Just will be the expectation of any merchant as well. So as we get into these infrastructures that are there, as we get to grow more, it's honestly very difficult to expect that a merchant will get money in T plus 4, T plus 3 times. It has to be max T plus 1, maybe very happy to have something. I have to say that it is our bounden responsibility to see that this happens. And here is where the public-private partnerships, the basic belief in these principles should be there. So if you look at the fundamentals based on which our payments infrastructure has been set up, there are no silos in particular entities or in particular activities. Now we are looking at an interoperable infrastructure. We are looking at everybody to gain from these benefits, be it the merchants, be it the customers, be it the entities. So it has its own earnings by way of different models. It need not be always a revenue in terms of money. It can always be a revenue in terms of data enrichment. It can always be something which people are using to bring others onto the fold of the financial services. Of course, when we come to data, there are other challenges. Maybe as we get to, we can discuss. But I am saying that there are no two thoughts on this. PPP is the way forward. And we have had shining examples so far. And this will definitely be seen in much more closer and in much more comfortable atmospheres as well. So each one is getting to be comfortable with the other side. It's not that there are two sides, public versus private. It's all now collaboration. If we have to think of a new product, unless the private sector comes and says, yes, I am having those apps that are ready which can launch these products, it won't work. So we saw that day before when 3 products of NPCI were also launched, how the private sector had chipped in at such a short notice. So my urge again will be from the private sector, because you are all very agile, you are very smart, you are very intelligent, you have the entire set of resources with you, to also be shrinking the time that is taken for different launches, because more and more can be delivered. The people's appetite is also very, very high. So we need to feed them quickly, and we need your expertise and involvement in this fashion that the public sector gets pushed by the private sector. And here I have no hesitation to say, please ask for more from us as well. We also believe that we are part of the public sector. Please treat us so, demand from us, and we will try to see how best we can deliver. We will try to also compete with you. So that is what I am trying to say, that PPP partnership should continue. Like we expect many things from you, you can also expect many things from us. So it's a logical equation, and I believe that's how we should take things forward as well.
That's a very great perspective, sir. And Samir, your thoughts on that? Like what he spoke about, a lot of expectations from the private sector. Any expectations you have from the public side on what more could be done, or how could this engagement scale further as we get to 100 million more customers getting into this umbrella?
To be honest, I started my career for about 10 years in the States. And when I was working there, I used to think that that was like the most evolved digital market. A year back, I was talking to someone I knew 20 years ago in my professional life, and I was exchanging notes. And I'm very, very proud to say, starting with the regulator, lawmakers, banking system, as much as noisy as we are, and that's our job in the ecosystem, we are the fintechs, we are supposed to be the flag bearers for the new models and whatnot. I think we are in a very, very spoiled market. I will say that. We don't say it enough. Because if you think about not just UPI, you think about so many different pieces of the core infra that's being handed to us to innovate on. Aadhaar itself is an example, CKYC, now account aggregator. We have multiple domestic networks in payments competing simultaneously in different form factors, enabling different kinds of solutions, and we all have access to it. I know, Harshil, you do, we do. So whether it's on the consumer side, it's on the merchant side, enterprise side, I think we're spoiled for choice on the areas in which we can compete. And I think that is actually testament to the fact that we have fantastic enablement. In terms of an area where I think we would probably do well to actually get more, and I don't know where it lies, is a common data pool for when lending really has to happen, like as a revolution. I think payments was more about the APIs and public infra, and that I think it's one of the best shining examples globally. But for lending to take off, we'll also need pooling of data from the fintechs and the banks in a way that the last mile consumer of today's payments can become tomorrow's borrower. And I think there we have a distance to cover. It's also a more complex one because of data privacy and, well, if data is the oil, then everyone wants to be a baron, so it's tricky.
It's a hard task in some ways, and I think and I mean both of you covered it in various forms. But I think just managing, and I think one of the things that Samir you mentioned earlier is how at some point, in some ways, and he also spoke about it. Sometimes it's the regulator driving the innovation, and the public side driving the private innovation in India, while in everywhere else in the world, it's generally the private side driving that innovation and everything else catching up. So that's an amazing aspect of the Indian ecosystem that that we have everyone basically aligned towards the same objective, and we're even pushing each other that let's get more out to the customer. And I think the connected topic with that is regulation and innovation. And I think but day before, the RBI governor also spoke about it, that on one side you want innovation, on the other side you want to protect the interest of the consumers. And I'll start with you, sir, that the regulator's job becomes hard in this because you want to allow innovation, you want to allow people to come up with new models, but at the same time you have to worry about the weakest section of the society and how they get impacted by some of those innovations. And in that context, while RBI comes up with a lot of research papers, discussion papers, takes a lot of feedback, how do you balance this? There have been a host of changes that RBI has been pushing for, whether it's tokenization, whether it's digital lending guidelines. How do you balance innovation versus regulation in some of these steps that RBI undertakes?
That's an eternal challenge, actually, balancing the expectations from the private and from the consumer side on the innovation front, and also putting in some regulations which can be balanced. No, it should not be leading to a heavy compliance cost on the people who are going to comply with also. Let me take a cricketing analogy because cricket is a flavor of the season. A good cricketer typically scores runs by playing through the gaps. Where there are players, he tries to play through the gaps. Even if there are some fielders, then he can actually play the ball a little slow so that by the time the ball reaches the fielder, he can score some runs. If the players in the industry, let me say maybe in the payments industry, let me say the fintech players, it's all becoming a little muddy, the fintech, the digital payments ecosystem. If the players try to think that they can get into those areas where there is a lack of regulation or probably there is no regulation, that becomes an area for us to look at. See, no cricketer can actually get onto his favorite shot, say hook or cover drive, etc. for long because the opposition is also watching. They will put fielders there when it comes to bat. Similarly, when we have the sector that is trying to get into certain areas where we feel that the regulation could be tighter, then we come in. And if there is no regulation, we don't hesitate to come in with a framework and bring the game onto a fair and level playing field. Having said this, we also experiment in certain ways. For example, if you look at certain segments, there were no regulation for some time. Then an indirect regulation came in, and direct regulation thereafter came in because each player became so important, and each piece in the payment space also needs to be looked at. So that is how the regulation also evolves. And in some areas, come out with some frameworks, and I wouldn't hesitate to say that the first framework will always be something that is explorative, and based on how it's accepted and how it pans out, we don't mind tightening or loosening the different expectations. Timelines is one area where we feel that it can happen quickly, but if the industry expects more timelines because they want a comfort factor, or if every player has to be comfortable only, then it can be implemented. That is difficult to accept as well. See, some days test cricket is very interesting. Of late, T20 is also very, very exciting. So we have to live in an era where even the regulatory compliance, where the compliance practices by entities are also quicker, and entities like fintechs and everyone should also devote equal resources for compliance. It's not just onboarding a customer, you have to onboard the regulator as well. Unless and until the regulator is comfortable, it's very difficult to expect more and more things to come. And please also understand that there are those groups that are also there in the ecosystem which also think that if the regulator says something and it is not able to implement, it's also a reputation risk for the regulator. So we have to balance that also when we look at this. And no harm in looking at the different ways in which the recent initiatives, I don't want to take any example at all, I don't want to give you any idea on what I'm talking, but some of the recent parallel initiatives that are happening are all to save certain things. For example, the data being breached, or the manner of experience of a particular online customer or a person going to the shop becoming as seamless as it can be. So that's our endeavor, and we have also now set up, say, certain systems that can serve as a benchmark or platform for permitting other systems to ride on that, be it domestically, be it internationally as well. So my expectation, I know most days when we open the newspaper, it is brickbats for the regulator, but I will be also happy that when we have one-on-one discussions with many of these stalwarts, they do say that some of the things are turning out good for the ecosystem. Such narratives should also come, because people should get a balanced view of what's happening. So I feel we need to be fair to ourselves, one as a consumer, and as an entity providing the service, we should balance that also. So just as you expect something from the regulator, I also feel that we are also entitled to expect similar things from the players and participants.
No, that makes a lot of sense, and I think there's not enough talked about how a lot of regulatory changes have driven a lot of innovation, and at the end of the day, solved for consumer protection, because that is an important aspect, and it helps everyone. At the end of the day, if people don't feel safe and secure while using the new digital platforms that we bring out, then it's bad for everyone in the ecosystem. Samir, how do you view this, like the balance between innovation and regulation? There have been a lot of regulatory changes in the last 1 year, and some of them, well, there are sections of industries who have appreciated that. There are sections of industry who have said those are like too aggressive at times. How do you view some of these changes?
I'll be honest, I have the luxury of being in my mid-40s by now. So by now, I think I've learned a couple of lessons, right? The directive we give to our young engineers when they join: build like a startup, govern like a bank. If you flip it, you're dead. Right? It's the easiest way to think about it, because when people think banks, 21-year-old think of really stodgy places where their uncles and aunts work in suits and ties, and these are kids running around in their jeans and tees.
There are a lot of bankers, by the way.
No, I know. And I'm saying I'm old enough, so I'm right in the middle, right? But the fact of the matter is, everyone starts up with a view to becoming large, having a lot of customers, addressing a lot of consumer pain points, and being successful. And the problem, I think, as Sir alluded, is we are finding ourselves falling short on the consumer trust side on multiple dimensions all too often. I don't think, by the way, it's just digital payments. This is something I think we see more closely because payments is such a sensitive area. But whether it's health tech, ed tech, the tech industry has, in fact, got a lot of brickbats for not being careful about data protection. And I think, especially with payments and health, I would say that I'd rather be regulated than not, just as a consumer. So I think regulation, welcome. A lot of discussion in the big tech world and in the Bay and in Bangalore circuits. You know this, we're from the Bangalore circuit. I would say we are better off being regulated from the get-go. I can say this for Phonepe. We were regulated on day zero. We merged with Flipkart. We had the PPI license. It's perhaps the best thing that happened. It's not to say that one is inviting more regulation. It's to say that making sure that somebody is actually telling you these are the minimum best practices to follow limits those gaps, as Sir said, where you can actually do things really badly. That's one. Second, we are in this peculiar market where, in fact, both entities like NPCI as well as our regulators are actually pushing for faster change and innovation than we are able to deliver. You know this, I know this, industry knows this. So again, spoiled for choice. I don't think we can complain we can't move fast enough. So if that's really the operating paradigm, I don't think regulation is the problem. I would say one thing, I think, where I hope we can land on, I think it's also a societal thing. Whenever something goes wrong, we, as a country, we have a habit of passing a new rule or a new law, any sector of life, right? Anything. I think one bad apple spoiling it for the lot is something that, like, it's hard, but I'm hoping that someday we can get to a point where there's the PSOs or the networks and the regulators, across the financial regulators. We can get to a point where individuals are held accountable as opposed to it becoming harder for everyone. Because fintechs, tech companies in general will keep pushing the boundaries of innovation and finding those spaces. So I think striking that balance.
No, that's an interesting point, and I agree with the view that I think uh, like our industry went through a transformation from being completely unregulated to indirect regulation to full regulation, and I think in general it has been a great outcome because it clearly defines the rules and boundaries in which you're supposed to innovate and in which you're supposed to play, and I think that makes it fairly more transparent for the entire industry on how or what are the basic rules that everyone needs to follow. I think I'll jump into the point that we left earlier, which is charging for public good, right? So I think recently RBI floated a discussion paper on payment charges, and there has been a lot of debate in the industry around. On one side, you don't want to discourage this growth that has happened because of changes in charges, but at the same time, there has to be enough incentive for the ecosystem to keep building more, keep doing more. So how do you balance this? Is there a middle ground solution that can emerge out of this debate?
You have rightly said that there is a discussion paper out there in the market. I'll be very happy if each one of you give your own points and inputs for the paper, and based on that a call could be taken. You would have seen that we have tried to cover all sides of the coin, not just two sides in the discussion paper, and the purpose is to elicit views and feedback. You've also seen the way in which Reserve Bank has been also looking at charges for the systems and services it offers as well. So I'll be very happy. I don't want to jump the gun now. I don't want to even say anything because we have received quite a bit of feedback already, but the timeline is still available. Maybe after this session, after this event, when you are free, kindly do give your inputs and be as frank as you can as a consumer, as a service provider, as an institution which is providing all these various services. So you can give your points of view, and believe me, just as we have been doing all these times, we will definitely take all these inputs and come out with our own with the framework that is good for the ecosystem. Having said that, we all know that when we say digital payments for public good, the expectations are also that probably cost recovery versus cost recovery plus what becomes the topic for discussion, and how far can that be stretched. How much more can a cow be milked if you look at that? So we have to look at that. And as more and more people come into the payments ecosystem who are new to payments as well, do we offer them something which is to be shared by all, or something which is differential or segmented? Could also be an approach. And if you also look at the way the global developments are in different markets, what they were thinking as something which could be levied for every activity or for every transaction is also now being changed. The narrative is also being changed. They also feel that probably a base can be there based on which, as I said earlier, many other services could be offered and leveraged upon. I just want to make one point when Harshilji was mentioning about being in a territory which was unregulated to less regulated to now regulated. I remember that popular slok from Bhagavad Gita where Krishna told Arjun that yada yada hi dharmasya. So I remember that. So everybody waits and watches, and if some things get out of hand, and definitely some things have to come. So it may be like that. So regulation can be a phased-in process. Regulation can be based on what the ecosystem is doing and can be expected to do better. And here, as I said, there is no other country to learn from or follow. So we can set our own example. So that's how sometimes it happens. I just remembered for no other this specific reason, just like that.
Makes a lot of sense. Samir, over to you. You have been quite vocal about this debate, right, on payment charges, and you alluded to it earlier that like public good, does it mean free? Is there a middle ground? What is the right incentive structure for, and it's not just for fintechs, it's for the entire value chain behind it.
The first discussion around this concept of MDR, I remember having was with the India Stack team in 2016 before launch. Where I remember where the entire infrastructure architecture was being discussed in the Bangalore startup circuit. And the discussion was that the Western model where MDR can go all the way up to 3-5%. And in fact, the most marginalized society where the highest MDR is perverse. I completely buy into that model. I don't think for money to exchange hands, you can keep deducting that much money. That's crazy. So I do believe in the both good for society and good for individual model. I don't think we can go below cost recovery. And I think that's where we are at right now. That's my big concern. When we say free, there is an underlying assumption that the system's somehow able to make money in alternate ways. That may be true for banks, I can't speak for them. That may be true for NPCI, but they're still charging the switching fees. It's definitely not true for the fintechs because unless we are exploiting the data in alt methods, and this is where we need to figure out as society. If we are telling our consumers that payments is free even though it's gone digital because your data will be used for offering other financial services or other products, then we need that last part of the discussion, which is the data laws to finally get codified and for us all to agree between the regulators, the government and others. Because the government's taken on the role with zero MDR coming from there. So it'd be great to have an end-to-end view. Then you know why private capital is flowing into the sector, right? And just because of role play, I'm sure my answer would be different if I was on the other side of the fence, but we're inviting a lot of private capital, global private capital, local private capital to invest in digital payments. The path to recovery and profit is not there. That's the one thing that worries me. That's why I've been vocal that an asymptotic curve trending to zero is the best outcome for society, whether it's telecom, electricity, anything. But if it trends and kisses the zero line, then I think nobody invests anymore, and that's the risk we are running right now.
Yeah. Just one point I just want to add is about, if you say one digital transaction or one payment transaction, we also have to probably look at segmenting this further. For example, it's a P2P versus a P2M, a large merchant versus a small merchant, a large value transaction versus a small transaction, instant settlement transaction versus a deferred net settlement transaction. So all those elements also come into play when we look at charges. And if you are giving something which is typically like, which I have pre-stored in my card versus which I borrow and then use, the typical dimensions could also be there to a charging pattern. We don't somehow get into this factor that depending on the quality of service or need, I can be expected to pay. It's like putting everybody on the same keel. It doesn't sound nice. So I will be happy to get those sorts of inputs. We will be happy to examine them as well.
You know, that makes a lot of sense, sir. And if we read through the discussion paper that came out, it is pretty comprehensive and tries to ask all of these questions. It actually asks a lot of questions on how should we balance this. And I think I think a lot of debate and discussion has been that maybe the answer is somewhere nuanced. It is probably not as simple as everything being free, but it's probably not as simple as let it completely be to the market. I think it's somewhere in between and maybe different answer for different segments and different kind of charges. So we'll, of course, all of us will submit our responses and we'll look forward to how that shapes up. I'll just quickly, given that we have limited time, I'll quickly jump to one of the most important aspects of this is inclusion and consumer protection, right? So with digital payments being and the kind of scale it has seen, of course, we have driven it to the masses. And along with that, there are all kinds of issues that consumers start facing. And I know RBI has done a lot of stuff with the Ombudsman program to now the online dispute resolution that is being pushed out. A lot of things to ensure that consumers are protected at the end of the day. So what are your expectations from the industry on what more could the industry itself do to solve that problem, to solve and to most extent the consumer protection problem? Because as we drive inclusion towards the lowest segment of society, how do we ensure that they remain protected while this innovation is happening?
So as I was mentioning that the fintechs and other people who are quite rich on technology and adoption, see, you also have to ensure that the customer gets an hearing. If he has to raise a voice or if he has to complain about anything, the person has to be given an audience in whichever way you can. But some of the experiences which we as individuals have seen, you go through some numbers and you are unable to probably reach out to somebody. And even those set of questions that are there for which you have to respond, they may not really suit your need as well. So you have to actually escalate the way in which you can respond to a grievance. And the way in which the customer is feeling comfortable may not be the national languages. There can be people or areas where they are more comfortable with the local languages as well, the vernacular ones. So we need to be conscious of their requirements as well. Because a person who is dissatisfied with the service will take a little longer time to come back. A person who is satisfied will tell a couple of others also to maybe entertain or accept this service from a company which he has liked. So we have to take care of that. And when you are also giving out lots of figures about your daily active users and monthly active users, please also give out figures on how many complaints you get and how much time you have taken to resolve those complaints. You have a 360-degree view of your own services, because it's also about people who could get resolution in time. I am seeing so many messages on Twitter. If somebody complains about an entity or about a product, immediately they are told that please DM us. I don't know whether there is an option for them to DM. If they exercise that option, whether they're actually entertained and their problem is resolved, is something which needs to be also looked at by the entities. And the resolution need not always be in favor of the consumer, because there could be places where the consumer accepts that it has been his fault, but he needs to be heard. And in some places and in some cases, there is no harm in actually taking care of the small values or small complaints of customers, so that the bigger ones, people may not complain much. So we have to again segment some of these things. One is getting an audience for the customer, then resolving it in a reasonable time. And let us also see some commitments that you make, that no complaint will remain unresolved or unresponded to in the next, say, 3 hours, 4 hours. And when we have come out with, you mentioned about ODR, we have come out with ODR a couple of years ago now, but the offtake is very slow. While we are very happy with the way the onboarding happens, the reach out happens, we also have to see that the dispute resolution is also taken care of. I have to take one example. Bankers are there, but let me not hesitate to take this example. When we have come out with these 24/7 systems, the expectations are also that people can make a transfer on a Saturday evening or on a Sunday morning. But we have some responses from banks saying that you have a compensation framework also as part of your various service expectations. We don't mind paying that penalty because I cannot afford to give services on a Saturday or Sunday. It's definitely not acceptable. We do agree that you have time constraints. So Friday evening at 6 if you shut off, and Monday morning if you open shop at 10 and you think that you can compensate the customer, please believe me, you are actually inviting trouble. So I am saying the grievance redressal has to be scaled up. People have to also have access to escalation matrices, and people have to be answered. That is one. Second thing is, it won't be difficult for somebody else, maybe don't say the regulator or somebody else, to put out numbers saying that this was the entity which got so many complaints, this was the entity who could not respond in time in 24 hours. Now, those will be yardsticks based on which we also evaluate a company's existence, performance in the ecosystem. So please believe in me when I say that you have to handle this expectation more responsibly, and the present dispensation doesn't give this satisfaction. Of course, RBI Ombudsman scheme is there. We should not be the first resort. Sometimes it so happens that the complaints get returned because we are the first resort. The first resort is always the entity that is giving you the service, and if you're not satisfied, you can come to the Reserve Bank. So please do that, and we don't get us to be on the wrong side of you for such reasons. We will be very happy if you pay equal attention to business growth and customer grievance redressal as well.
Yeah, no, that makes a lot of sense, sir, and that covers a very wide area of issues that need to be solved. And it's not just a regulator's problem; it's the industry's problem as well. Because if customers don't feel safe, how it scales up.
I think Sir mentioned a lot of the curative aspects which we all have to actually get better at, and I think localization is one element that I think everyone's not managed to do. It's even in this day and age, it's easier to have a call center where people can respond in 22 languages than to actually build apps that do it well. Unfortunately, like that's just a global problem. But I think, I dare say, I think fintechs or startups in general are more empathetic on the consumer grievance redressal side, where I think we can collaborate a lot more, should be on the preventive side. So central initiatives from the central bank, tokenization, 2FA, there's always adoption pain, but there is huge gain systemically. Where I think as an industry, again, this goes back to the data pools thing. One thing I would love to see, where I think as a payments industry and banking industry, we really need to work together, is all these social engineering scams and fraudsters, right? We still don't have a database where your known fraudster list and my fraudster list and the bank's fraudster list is pooled. And this is something we've been working on, and then there's an initiative from the government side, and FIU is trying to build one, the regulators here has got one. We need one national database. The risk with that is that somebody mistakenly makes an entry and a consumer's life could become a hell. So we need the countermeasures there as well, and that has to be coming from the regulator or government agency. We can't decide the fate of a consumer by labeling somebody as a fraudster for life. That said, we need that database because that, to me, is where people are most prone to getting hurt. And that's one area where also our ability to actually offer any redressal is very poor. Once a fraud happens, you can't really do much. I think that's an area where we all can collaborate a lot more.
Yeah, well, that makes a lot of sense. And so,
Yeah, see, we always talk about know your customer. I also want you to dwell more on, look at know your merchant or the person whom you're onboarding. See, sometimes we have seen that the first mover or the second mover takes away a bigger chunk of the ecosystem, and what is left is what the others want to reach out to, and whether the rest are good or not, people are trying to onboard them, and in the process we are seeing that the due diligence standards have been diluted, because of which the bad experience increases, because of which nobody is able to do anything. So I here will be actually expecting more from the industry in terms of not just having your own blacklist, how we can collaborate together to have an industry level blacklist which can be used by ourselves. Please do not expect the regulator to come and step in for every one of these requirements. And second aspect is, of course, when you try these initiatives, there will be these false positives and negatives. Those are parts of the game. But we can have a system where what you do to onboard and the experience you actually have in ensuring that the bad players remain out, it should be also enjoyed by everyone. And nobody should be, any other entity should not go through the entire process to also keep somebody out. So I feel you should collaborate more. You have wonderful teams sitting here who are able to arrange such events. I also feel that if people can all collaborate together to see such industry level initiatives also being scaled up.
yeah. I know we have limited time. I'll just have the last question on what's next for digital payments. Like there have been a lot of new initiatives that have happened, like right from tokenization to recurring payments to a lot of scale up in digital transactions. I know there is UPI Lite and a couple of other new initiatives coming in, which will drive further inclusion. But from your perspective, sir, what next could the industry or all of us do to take digital payments to the next frontier, to the next 100 million people?
Let's not look at next 100 million alone, because we have the globe as our playground. So we are going to go to international markets, look at a bigger number. And many initiatives have been announced. They need to take a little bit time to pick up steam as well. But you would have seen the vision document that Reserve Bank has brought out, 2020-25 December. We have highlighted a number of things we want to achieve. My urge to everyone is to help us deliver on the commitments that we have made in the vision document. Kindly do partner with us. But the beauty of fintech, the beauty of innovation is the surprises that it offers. No? We don't want to be prejudiced. We don't want to prejudge what is going to come. We are willing to be receptive to new thoughts, new ideas. The manner in which the delivery can happen to each and every segment in the ecosystem. I did mention one or two things that T+4 is something which is gone by. So let us come closer. And I also said that no point in now aggregating and coming to a netting level of transactions. DVP3 was when technology was very bad. DVP1 is the way now. Let us look at gross and other risks that come in because of netting. So we have to take care of that. The world, as I said, is our playground because many new markets are interested in us. And they have seen the way in which we have had these partnerships. So they expect the same things to be made available to them. So you will be very happy to get a bigger audience and a number of new markets to reach, because we are collaborating and we are helping you do that. So kindly partner with us. In the domestic segment as well, as I said, a couple of expectations about what more we can bring in. We do have certain ideas on that. And as and when the payment systems become, say, more used 24/7, the expectations will also be for the markets to be available for a longer time as well. So we have said 24/7 for the 24/5 for the forex markets in terms of rates, etc. There won't be a day that is very far off, and people will expect the markets to open early, end late. There was another announcement which was made yesterday by one of the other regulators about what has been the good experience of UPI in the IPO could also be explored or experienced by the people in the secondary market as well. So multiple opportunities are available, multiple expectations are there. It will always be nice to wait for some of those things. And my request a little while earlier is, when these things come up, kindly do not be found wanting or lacking. Be available. The frequent requests that come to us from the industry is that, sir, go slow. and we don't have resources to be given to all the priorities, so kindly prioritize them for us. No, it doesn't work like that. So you have to have priorities, you have to have resources that can take care of the priorities. Business growth will always happen if you partner for this system growth as well. So kindly cooperate with us. That is my request from the industry, from each one of you, young, senior, etc. Kindly see that we don't have to actually look at prioritization. We will partner with every initiative that is coming up, and you can just say that I'll be the first one to come out with. When we are getting into some of the new products and some of the new markets, we are actually requesting banks and players, why don't you be the pilot one? They are saying, sir, please leave me alone this time, next time I'll come. We don't want that to be the situation, honestly. So we want to have a good reach. Everyone should be in this. So kindly help us, and let us wish and expect that the global fintech is actually global, the payment systems are actually global, and payment systems will lead the way for global integration, for financial services to be also transcended to greater levels going forward.
Samir, what is your question? Of course, Sir spoke a lot about almost every segment of fintech, but what are some of the things that you look forward to?
So I think definitely UPI International, just more because I would love to see a homegrown network and ecosystem just become sort of the poster child for digital payments forward, right? Just as a citizen, I'd be very, very thrilled. At a personal level, I'm equally excited about UPI 123. I know we don't talk about it often enough. Also, I think there's a view that feature phones may convert. But if you're talking inclusion, that's really where like you want to solve for. We've done brilliantly with QR codes, cheap QR codes, by solving for the vegetable bhaji walas and the fruit vendors and everyone who was not getting service in the POS world. We've not managed to do that for the consumer. So I'm very excited about that one. So those are two completely orthogonal plays. What I think I'm really excited about beyond that over the next 4 to 5 years is finally the promise of payments data getting harnessed for financial services, micro and mid-sized financial services getting opened up. I know the data is there now. All of us have it in some combination. At some point, we will start seeing that value unlock to be able to offer cheaper and more direct services beyond just payments. I think that's the one that really will sort of, when we talk financial inclusion, we don't just say payments inclusion, obviously. So that's the one that is lurking. I can sniff it. It's there somewhere. We just don't know exactly how to get there.
No, I know we are out of time. I don't know if you have time for a few questions. Yeah, we can take a few questions. Yeah. You can take the mic.
Hello.
Thank you.
So from the speech, what I understood that regulator somewhere is not confident that whether they're meeting the industry expectations. But I can tell you with authority, because we do the curation for more than 50 countries, and you are doing excellent job. So don't have any apprehensions on that. Now coming to the question. If you are a regulator, you need to have a knowledge more than the market participant. So how are you ensuring that you are more knowledgeable than the market participant, and how open you are to acquire knowledge through unconventional ways?
So,
the proof of the pudding, I feel, should be in the way you are looking at the regulator and the regulations that have come in. If you feel that we have been found wanting or we did not have the knowledge to come out with these regulations, I'll accept newer ways of learning as well. But we do engage enormously with the industry. We do come out with multiple discussion papers trying to present our points of view the way we understand, and we do expect the inputs that come in to also say that, boss, you are wrong on this, or boss, you could also give some more thoughts to these sides as well. So we do take a lot of inputs from those papers and the discussions we have. We have not hesitated to meet the industry. We do have lots of interactions with the players, one-on-one, groups, etc. And we do hear. And many a time I have been requesting industry players to come and share the way you are developing an app or a particular product or even something which on the security side as well to come and share with our team also. Couple of bad experiences we have had where the industry is not willing to share. I am saying that here we are only students to learn. So do not hesitate to come and share with us. And please do not think that if you share something with us that we are going to use it on you or we are going to use it on the industry. Absolutely no two thoughts on that. And this is a segment where nobody knows how it is going to pan out tomorrow. So sometimes we are also putting our foot in a puddle of water, maybe in the dark as well. So we don't know. And some of the systems that are now available 24/7 do also give us some sleepless nights because sometimes the transactions are delayed or some other issues are emerging late in the night or early in the morning. We also try to reach out and see why exactly it's happening. So it's a process, and over a period of time, please believe in me, there is nothing like a single solution for regulation. Regulation evolves, and I'll be very happy to say that we will evolve with the way industry evolves. We don't want to set some high expectations or high compliance costs. That is absolutely no thought of ours. And generally, if you have been listening to Reserve Bank, we are trying to be a catalyst. We are not trying to be a overseer or a regulator. We are trying to put systems of ours which can be used by the industry. We are trying to see how best your systems can be taken forward. Sometimes you may find that our approach is very, maybe not very aggressive. For example, if you bring in something on customer centricity, I didn't want to raise, but Samirji mentioned about tokenization. If you bring in something that is consumer centric, please don't think that it's a bad move. And let's also publicize this part to the global world that this is also a good approach. Interoperability, the customer centricity is also a good approach. So I will be very glad if more such interactions are there. We can learn more from the industry. The players like you, the persons like you or youngsters, kindly do share your ideas. You can always, I am just a mail or a call away. You are most welcome to use any of these channels. But we will learn by our experience, and if you are found wanting, we don't mind learning. Samirji said he's in 40s. I am in almost nearing 60s, but still I don't mind learning from you more. Thank you.
Thank you, sir. And given that we are out of time, we'll end it here. I know this conversation could go on for very long. It was a very interesting debate, but thank you for the honest conversation from both of you and for everyone for participating.
Thank you. Thank you very much. Can we have a huge round of applause?